Why do I do it? Why do I own 38 dividend-paying stocks when I could own fewer? Ian, why do you diversify your portfolio so much? These are questions I receive all the time from my subscribers. In fact, I received a question recently and the subscriber said, Ian, Charlie Munger, this is Warren Buffett's famous business partner. This is his book, Poor Charlie's Almanac. In fact, I have the signed copy here. Check it out. There is Charlie Munger's signature right there. So this is the signed edition of Poor Charlie's Almanac. Anyways, what the subscriber was saying is Charlie Munger was quoted as saying, hey, you only need three stocks to be properly diversified. Ian, why on earth do you have 38? That's kind of crazy. Another subscriber said, Ian, I've been investing since the 1980s. I'm here to tell you, you don't need 38. Well, I do need 38, and I'm going to tell you why. Today's video is all about my personal diversification strategy for dividend growth investing. So let's jump right into it. My goals in life are very different than most investors. Most investors are out there, they're looking for kind of total returns. They're looking to build a nest egg, something that can be used when they retire, and they're looking for a traditional retirement. They're looking just to build up wealth. By contrast, I want to live off of dividends, and I want to do that at an early age. I don't want to wait for traditional retirement. I want all of my living expenses covered by dividends. Let's look at this a different way. When one relies on a job for income, if the employer comes to the employee and says, hey, I'm going to cut your salary by 10%, that's a real big deal, especially when someone's relying on that money to pay the bills and all of a sudden they have 10% less. There may be certain bills that can't be covered anymore. By comparison, if I had only 10 dividend stocks and one of them had to suspend their dividend for some reason, and I was relying on my dividends to pay all of my bills to live off of these dividends, that would be real problematic. It would be the same thing as receiving a 10% haircut from my earned income if I were working a job instead of living off of dividends. And so because my eventual goal is to live off of dividends, look, I'm not doing that now. I'm reinvesting all my dividends. I don't need the income now. One day, however, I will. I am trying to build a disruption-proof portfolio. I want a portfolio that is strong. It's like a tank. If any one of the stocks that I own faces a challenge, it doesn't hurt me. It doesn't affect my income because it's inconsequential. It's one out of 38 stocks. I can shoulder that. If it's 1 out of 10 stocks, maybe I cannot. And so that's the difference between being a total returns investor and a dividend investor. When one is trying to live off of dividends, in my opinion, it's important to avoid disruption of income. It's important to build a tank, something that is strong, something that can survive any of the challenges that may come. Point number 2, representation of most sectors. Personally, I like to have broad representation in my portfolio of most of the major sectors out there. I've talked about a lot of these sectors on my channel. I like consumer non-cyclical, talked about financial services, we've talked about energy, real estate, we've talked about industrials, all kinds of sectors here. But did you know a lot of these sectors, they have subsectors? So consumer non-cyclical, for example, one of my favorite sectors, if not the favorite sector. Within consumer non-cyclical, there's companies that make beverages, there's companies that make food, there's companies that make household goods. A lot of the time, these are different companies, and so to have proper diversification, to have proper representation of most of the sectors, I'm looking not only at sectors, but subsectors as well. Quite frankly, to get to my goal of having that broad diversification, it kind of takes a lot of stocks. It actually takes about 38 stocks is what I've found to do it right. And so I want that diversification because what I found is when one sector is doing well, another might be doing bad. They can cancel each other out. But if I'm overweight in one sector and I have all my eggs in one basket, if that sector faces challenges, it could be problematic for my overall portfolio. And again, I'm not looking at total returns, but just in the scheme of things here, I need to mitigate risk. I want to mitigate risk through diversification because I am building a portfolio that I can live off of. These are dividends that I can live off of. And the difference here is Charlie Munger, Well, first and foremost, this is one of the wealthier guys around. Obviously, Warren Buffett is well known as being one of the wealthiest people in the entire world. And they have different goals than I do. And so when they say something like, hey, you only need 3, they're looking at it from more of an academic perspective. And quite frankly, Warren Buffett, he spends most of his time reading. He sits around and he enjoys reading. Awesome, more power to him. He spends like 4 or 5 plus hours a day reading books, manuscripts, investment literature, whatever he can get his hands on. That's not my goal. If I had financial independence, you will probably find me out there training for a marathon, running, swimming, enjoying time with the family, spending time on my investments. I got a lot of hobbies. And so anyways, I am different. I have my own goals. That doesn't mean that I'm right and Charlie Munger is wrong, or Charlie Munger is right and I'm wrong. We just have very, very different goals, and Charlie is approaching it more from an academic perspective. I'm approaching it more from a practical perspective, in that I am aligning my portfolio strategy to my personal risk tolerance, to my personal goals, and my goal is to live off of dividends. Because that's the goal, I want no disruption of income. Knowing that things can happen from time to time, I want representation from most of the sectors and subsectors to create a tank, a machine that cannot be disrupted. So point number 3, certain sectors require intra-sector diversification. Let's take the energy sector. I've talked about this sector before. Things can happen sometimes in the oil and energy space. It's very tragic, it's very sad, but things can happen. If I were to own just one oil company, and that oil company is the one that faced some big oil spill or some big mishap, that's going to be very problematic. So there are certain sectors where I like to own several stocks to diversify risk, intra-sector diversification. Another sector that requires, in my opinion, a bit of intra-sector diversification is the utility sector. Because utilities are very geographically focused, especially when a big storm or a natural disaster comes through, if it wipes out one of my utilities temporarily, they may have to suspend the dividend, for example, temporarily. If I own just one utility, that could be problematic, but I own several utilities in different geographies to mitigate that kind of risk. Now, I'll tell you, a subscriber was saying, hey, Ian, because I just brought up this point on a comment, he's like, yeah, but I've owned utilities a long time. I've never experienced that. And in fact, product recalls happen all the time, and those can affect your consumer non-cyclical. I kind of disagree with that, and I'll tell you why. Procter Gamble, this is a company that I own. I love this company. Full disclosure, I own Procter Gamble. I've been buying it in 2018. It's starting to go up a bit, and so I'm not as happy at these levels, but I continue to buy. Core holding of mine. I love this company. Anyways, Procter Gamble, I'll tell you, Cascade. I didn't even know they made this. This is the Cascade dishwasher soap powder. You put it in the dishwasher. Works like magic. I didn't even know that Procter & Gamble made this stuff, but I was checking on the box and I saw, all right, Procter & Gamble right there. And so that's what I love about this company. They make products I didn't even know they make. They make so many products. And so Procter & Gamble's example, let's say there's some kind of recall on something. Fine, their portfolio is so diversified, they own so many companies. Recall, it's a drop in the bucket for them. Utility, if the whole darn thing gets wiped out, there's no power. And so this is the difference between a utility and Procter & Gamble. And so for me, look, I like to have intra-sector diversification in certain sectors. Another sector is healthcare. Healthcare, a lot of these big healthcare companies, they're reliant on certain drugs that they make. These drugs have patents. The patents expire. They have to have a strong drug pipeline, but it's really hard to get new drugs approved, breakthrough drugs. And so it's kind of a game of always innovating and keeping up with patent expiration. And so for that reason, I like to have some diversification in that sector. Healthcare sector, great one to diversify. And so when I factor in that I want representation from most major sectors, I want intra-sector diversification to mitigate risk in things like energy, healthcare, utilities, pretty quickly, how can I do it with less than 38 when my goal is to have a disruption-proof machine of dividend income? I'm not a total returns investor. No brainer for my personal situation. That said, of course, I respect everyone out there who has a different opinion because, quite frankly, my portfolio is a representation of me. Charlie Munger's portfolio is a representation of him. Your portfolio, it's going to be a representation of your unique goals, risk tolerance, and preferences when it comes to investing. Everyone needs to craft their own portfolio, but I'm just sharing today why I have to have 38, and I could not imagine doing it with too many less stocks. Maybe I'm a bit over diversified, but I have no problem with it. Anyways, next one, point number 4. If I were just starting out right now again, I would not have 38 stocks. This is the mark of a more seasoned portfolio. My portfolio has been around for a while, and my smallest companies that I own in my portfolio, the kind of the minimum position I'm willing to take is 1%. A company must represent at least 1% of my overall portfolio value, and it can dip a little lower, maybe like 0.8%. I can round that up to 1, but it's got to be meaningful. Here's the deal, 0.8%, 1% doesn't sound like a lot in terms of percentages of one's overall portfolio. That said, my portfolio value, it has a long way to go because I'm not at financial freedom yet, but I'm on my way. I've been doing this a long time. And so what I'm saying is 1% doesn't sound a lot, but 1% of the total, when I look at it at raw dollars, that's a lot of dollars. That's a lot of money. And so for me, because 1% is a lot of money, I have no problem diversifying because it's not just about percentage allocation, it's about dollar allocation as well. I think a lot of investors forget about this. And so I challenge you at home, look at your portfolio. This is for people with more seasoned portfolios. What's the value? Is 1% a lot of money? If it is, maybe it makes sense to diversify more. Next one. Look, it just works for me. This is so important. The academics out there, they can argue any point anyway. You can always find data to support anything. I can argue the same point both ways here on my channel using different data sets or even the same data set to prove or disprove something. Academics will always find their way. At the end of the day, when it comes to dividend investing, it's important to craft a strategy that works for you. This strategy works for me. When one invests for dividends, it's about commitment. It's about persistence. It's about the long term. It's about being in the game for a very, very long time. And look, if I had less than 38 stocks, maybe I wouldn't be as excited about my strategy. Maybe I'd be more prone to just spend money on other stuff. Maybe I wouldn't be as engaged. And so by having 38 stocks, it keeps me engaged. It keeps me happy. It keeps me motivated. It works for me. It makes me more focused on the goal. And if it keeps me focused on the goal and I give up some total returns because I have too many stocks, I just don't care. It doesn't affect me. It doesn't bother me. I love it. I love having so many stocks because it keeps me motivated on my goal. And so that's what it's all about. And so for you, maybe 38 stocks would keep you further from your goal. Maybe you're like, wow, that's too much for me to wrap my hands around. I don't want to do that. It would just keep me from investing. If that's the case, maybe it makes sense for other investors to have fewer stocks. If it's more motivating for some people to have 5 stocks instead of 38, maybe that's something that you need to learn about yourself. And so the key here is for each investor to learn what keeps them in the game, what keeps them motivated. I'll link in the description below. I did a video a long time ago about how to stay in the game, stay focused, stay motivated. This is a game that takes a while, and one will go through seasons. There will be times when you're more motivated, less motivated. I have found that I've been more motivated as ever because I have 38 stocks. Anyways, here's the key. This is kind of the secret. It is not difficult for me to manage 38 stocks. And so I recently did a video on a new position I own. I'll link in the description below. I really agonized over this. When I add a new position to my portfolio, I just agonize over it. But once a position is in my portfolio, I buy and I hold forever. And so I don't have to do a ton of ongoing analysis. The ongoing maintenance is not that high. And so people might get the idea that, hey, Ian, you do these extensive financial modeling for each stock in your portfolio on an annual basis. It just isn't the case. I'll do it once in a while. I'll do it when it makes sense, especially if I'm deploying money into a net new position, or I'm putting money into an existing position, like a good amount of money. I'll do a quick refresh on my analysis. But the secret here, and this is the secret that's so important, I believe, for dividend investors, is once one has identified the right stocks, those buy and hold forever stocks. Once one has the buy and hold forever stocks, that ongoing maintenance, that's the secret. It's just not that much. It's not overwhelming. And a lot of these stocks, sometimes in the comments below, I'll hear news about them from you guys before I even know the news. Look, I check my stocks every day. I got on my phone. I flip through. I don't see all the news though, and so sometimes I hear stuff here about companies I own I didn't even know. And so I almost, I like that. I'm almost proud about that because you don't, or at least I don't want to be too attached to these companies on a day-to-day basis. I want to buy and hold forever. I don't need to analyze them every day. Certainly don't have to look at every quarter of earnings. I can look at it on like kind of annual 10K type level. But boy, I don't need to be sweating the details. And so because of that, it's just not that difficult to manage. And a bonus here. I love averaging it. I'm always buying stocks. I'm buying each month. I'm making multiple trades, buy orders every month. And lately, a bunch of buy orders every month. Anyways, the thing that's really easy here is when I own fewer stocks, I agonize about adding new stocks. You probably saw that in my recent video about the stock I just added. I'll link below. When I have existing stocks, though, it's so easy. I basically just look, is the stock price down? Where's the PE ratio? Is the dividend yield good? Is the dividend yield really high? Does it look like a value? A lot of these companies I've owned for so long that I know when it's a value, I know when it's not. Something like Procter Gamble. I know when Procter Gamble is a value, and this is why I'll link in the description below. At the beginning of this year, I told all of you, this is the stock I'm buying this year. This is the one I'm focused on. Lo and behold, it's already trending up. It's already getting a little bit too expensive to buy. I knew this was a value, and so I just focus, buy more of it. That is easy because I own 38 stocks. I look at the playing field. I look at it pretty much every day. Which ones are on sale, which ones are not. When I own that many stocks, there's always going to be at least 2, 3, or 4 that are on sale. There's usually 1 or 2 that are deep discounts. It makes it so easy just to effortlessly know where to put money, know where to deploy my next dollar. But if I had fewer stocks, and let's say none of them were on sale, and being that I want to be in the game, averaging in every month, that alone mitigates risk, quite frankly. That's a lot more difficult with fewer stocks because maybe none of them are on sale. But because I own 38, there's always something on sale. It just takes the challenge out of the game. It skews the game in my favor. It makes the game so much more easy. And so look, the academics, they can argue it any way. For me, I can't see any other way than 38 stocks. Now, I'll tell you, an investor on my channel, subscriber, just said, Ian, I bet you're going to have 40 stocks. And I love that comment. I actually didn't even think about that consciously, but now that I got the comment, thanks for that comment. I probably will at some point. That's a nice round number. I'll probably cap it there. I can't see myself going past 40, but it'll take a while to get there. At this point, I'm not going to be probably buying any net new stocks for a while. I've already added 2 new positions this year. And so we'll see. And anyways, I thank you. I thank you all for the question. This is a great question. And look, like I said, I'm coming across strong here because I'm passionate about this and because I know a lot of people, quite frankly, are questioning me. They're questioning whether I'm making the right move. And so I'm trying to show my conviction as to why this works for me. It may not work for you. It may be the complete opposite for you. It may be crazy. It may be too many stocks. But I'm just trying to say this works for me. Everyone needs to find what works for them. And I'm just so happy to have 38 stocks. Anyways, thank you. If you enjoyed the video, I please invite you to give a thumbs up, a like, a subscription. All of that means the world to me, especially on this video, and I'll tell you why. This video was very hard to film. For some reason, I was facing trouble with my audio equipment, so I thank you for bearing with the audio. This one, it might be a little bit of lower quality. Thank you for hanging in there. I'm probably going to have to buy some new audio equipment. I'm facing some challenge there, so I actually had to film this thing a few times, so the life of a YouTuber. This is... Some of these videos are just more difficult than others. This one, boy, that audio stuff threw me off. And then, new day, trying to film it. And boy, as soon as I start filming earlier today, my gardener shows up. He starts doing his landscaping. He puts the blower on. I'm into the video. It totally throws me off. I have to go away, come back. So this is probably take number 4 or 5. And so if you appreciate what you see on this channel, if it's helpful to you, if you enjoy following my journey, please like, subscriptions, comments, share it with your friends. Follow me on Instagram. I'll link in the description below. I'm sharing insights there as well. All of that means the world to me. Please, it really does. And thank you, thank you for bearing with me with the lower audio quality today. Boy, this video gave me some challenges, that's for sure. Before I leave today, in terms of full disclosure, I own stock. I am long on Procter Gamble, ticker symbol PG. Go Procter Gamble. Cascade, didn't even know they made this. I love you, Procter Gamble. Thank you for surprising me every day with products I didn't even know you make. And in terms of a disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. This video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. I'm literally here on YouTube just sharing my personal journey. I'm wishing you all of the greatest. We are 12,000 Dividend subscribers strong. We are a community supporting each other. Truly, if you have comments, they're a different viewpoint than mine, you disagree with me, thank you. That is just fine. Like I said, the comments that fueled my video today, I love you guys. Keep it up. Everyone's got their own strategy, and I believe we're all right, because we're all right for ourselves. Everyone is going to find what works for them, and that's what this community is about. And so let's just support each other. Thank you, everyone. I will see you in the next video.